Hello, people are coming in. This is Steven Sernils, the chair of EVPA and also of the task force for the corporate initiative. I see people coming in. I guess most of you can also see each other. I see, try to get them all on one screen. Vincent, you're there. Steven from Portugal, great to have you as well. Anna, Dario, who else? I don't know, can I see somewhere how many we are? Down there, 12 people. Yeah, good, good, good. And Beate, you're still around.
Yes, hello, Steven.
Hey, hey, hey.
Hey.
Good you still follow.
Thank you.
Beate used to be the director of the Swiss Foundation Group, and she was instrumental last year as well in putting all together in Munich. So good to have you as well, Beate. And anyone else? I can see Dana, Johan from Hilti Foundation in Liechtenstein. Good, good. Okay. Yeah, people, I leave it to you people to show your picture, yes or no. It might be nice, but it's not required. The format of this session is as follows. I will give a quick introduction while I'm using one slide, so to get acquainted with the topic. Then I'll invite Pim. Pim is with us. Pim Mol is the managing director of the Rabo Foundation, and he will explain how Rabo is adopting this scale strategy, because this session is mainly about how to scale to the different corporate social investment vehicles, including finally maybe the corporation. So he will give a presentation for about 10 minutes. Then I'll open the floor for Q&A to Pim. I'll moderate that, and if you have questions, I think most of you are used now by using one of those tools like Zoom. So I would like to ask you to post your questions in the chat box. I can see there are already 2 people, okay, just general questions. So please, during Pim's presentation, put forward your questions in the chat box. I'll pick them, and I might ask you to rephrase it, or I might ask it directly to Pim. So then we're around half an hour down the road, and then you'll break out in 2 breakout sessions with 2 specific questions. And I'll come back to that later for a discussion of 15 to 20 minutes. And then we reconvene for the last 15 minutes to have a final discussion about the 2 questions. That's the setting. That's how we're gonna do it. Arno, if you can maybe show the first slide. There it is. Can you put it on presentation mode? Yeah, that's very good. I know. Thank you very much. Look, most of you have been seeing this spectrum of capital coming from the left, where certain actors like philanthropists focus very much on impact, very often with grant money. But due to, we all know, pressure and also new thinking and of entrepreneurial thinking, this is moving into what we call impact first, where impact is still the most important leitmotif, but where also financial returns, sometimes even financial positive returns, come into play. From the other end, we have the corporation that once in a time, and still today sometimes, started from finance only, but more and more, I think this is not new to all of you, we are confronted with this triple bottom line, where finance and shareholder value for sure is still important, but the stakeholder importance becomes front and center, triple bottom line, also social, environmental, and governance issues are coming in. So these 2 movements are happening. And if we look into the corporate setting, the corporate context, then what we've been analyzing over the last year is that although it happens outside the corporate context as well, within the corporate context, we see that people like you, like corporate foundations, they're exploring how to team up with the corporation. When I say team up, it's a bit, I would say it's a sensitive word, because of course, both the corporate foundation and the corporation, they definitely have their own strategy and their own guidelines and their own kind of settings that they have to operate within. But nevertheless, we see that if you define a larger purpose, dot on the horizon, where you want to go on this new shareholder model and this value creation, we see that there are allies, there are ways to start complementing and reinforcing each other. As Antonio was saying during the plenary, the Repsol Foundation about a year ago decided that Repsol, as an oil and gas company, they want to become CO2 neutral in 2050, which I think as a oil and gas company is of course a major challenge. But they also realized that only going that challenge with the company would probably jeopardize some of the opportunities. So hence the corporate foundation incubated a corporate impact fund of 50 million, where they source social innovations that should have a certain profitability, but are a bit larger than the mainstream business of the corporation, into circular economy or in CO2 capture or in other areas that adds to this environmentally friendly setting. And they also have an incubator and an accelerator that kind of feed the impact fund. So they are working onto this whole pipeline of early stage, later stage, and finally the company taking over in order to scale. And that's a bit the setting of this discussion. How can corporates, together with their corporate social investors, think, argue, collaborate, and convene in order to scale the social impact while in certain areas also generating profit? And I think there's no better person here to illustrate this strategy than you, Pim. You've been working in the bank itself for quite some time, so you know very well how this big machine is working and thinking. But I think I was there when you were appointed the managing director of the foundation 3 years ago.
Correct.
Where you started to head the foundation and where you also work together with your colleagues in the Rabo Rural Fund next to the foundation and with the Rabobank. So Pim, the floor is yours to give one example of how scale can work in the corporate social investment space.
Thank you, Stephen, and good morning to all of you. And it's good to see some familiar faces, be it at a distance. As Stephen already said, the EVPA has done some research in a number of models of how complementary corporate impact approaches can be made. And my short talk is about the scale model. So you have the depth model, you have the scope model, and you have the scale, as Stephen mentioned. So it is about how to get scalable social solutions, or how can we help scale via the company's value chain, so that you use the company effect as well in order to create social impact over time. So it should be complementary to each other. I'm heading up the Rabo Foundation, which is the corporate foundation of Rabo. And perhaps you know that Rabo is, from its origin, a farmers bank. So it's probably no surprise that the Rabo Foundation worldwide in the developing countries focuses, as you can see on the slide, on smallholder farmers. And there are a lot of smallholder farmers all over the world. And unfortunately, they're very much connected to poverty. As you can see, that more than 2 billion people survive on, most of the times, less than $2 a day. What you also see is that 75% of these live in rural areas. And that's our main focus, in fact. And as 80% of our food that we consume worldwide is made and grown by smallholder farmers. So we focus on them, considering our roots as Rabo, as we're very active, especially abroad. In the Netherlands, we're a retail bank, but abroad we are leading food and agri bank, to finance food and agri. So for the corporate foundation, we start at the bottom of the pyramid, you could say, and we focus on smaller farmers and we finance them. And we can go to the next slide, I know. On this slide, on the right-hand side, you see at the bottom with a high risk level, you see that on the left-hand side of the high risk appetite at the bottom, and the investment size is of course small, and hence here you see Rabo Foundation. The next step that you see is Rabo Partnerships, and after that you get wholesale and rural, which is the major part of the bank abroad, and focusing on financing major companies like Nestlé, Olam, Ecom, Syngenta, Trafigura, Vincent, and more of these companies. We focus at the bottom of the pyramid, so we focus with the Rabo Foundation to as an impact financer. So Stephen showed that the development of a lot of corporate foundation comes from the philanthropic side, and we have taken it since my leadership 3 years ago to focus as an impact financer. So the key thing that we do is to provide loans for cooperatives, just like we were founded as Rabo 125 years ago. But these loans to cooperatives, we give them because it's high risk, and in their own country, in these 22 developing countries, they can't get a loan themselves in these countries because of that high risk. The next step within Rabo is the Rabo Partnerships. Rabo Partnerships has stakes in banks in developing countries, like in Tanzania, NMB Bank, or in Uganda, DFCU Bank. And next to the stakes that they have together with FMO, the Dutch organization, they also help banks, be it from Myanmar to Colombia, to develop themselves in these countries, and especially to develop themselves in order to give more credit to the people in the urban areas, but especially also in the rural areas. Next step is, of course, together with TCF, trade and commodity finance, which for farmers is, of course, take coffee and cocoa is very important to trade over the globe. Here, Rabo is also active as well. You see the dotted line, and that shows that when I came to the foundation 3 years ago, we had a fund, a rural fund, and that is focusing on the missing middle, so to speak. And the dotted line is in fact showing the missing middle between the Rabo Foundation along the value chain to Rabo Partnerships. As we focus, and you can show the next slide, Arno, with Rabo Foundation, as stated, we're active in 22 countries. We give loans of about 40 to 45 million a year. And the average loan size is about 250,000 euros. And hence we're at the bottom of the pyramid, as I've just shown. We get our funding from the bank, 0.5% of the profit of the bank. We get it from private banking clients. We get it from corporate clients, but also from our employees. And more than 1/5 of the employees is member of the Rabo Foundation. And as stated, we support nearly 300 cooperatives and SMEs in developing countries. We focus the foundation from a corporate philanthropist setting to an impact financer, impact first. But with the average of 250,000 euros per loan, we saw that in fact it is a major step for a lot of these cooperatives to become independent and to take the next step in their development, either to get a loan in their own country or to get to another bank or to get to a broader spectrum of impact financiers. So this missing middle is really important. Hence we had already, I know the next slide, we had Rabo Rural Fund. That was founded, as stated, in 2011. It's part of the management steering of the foundation. It also has a focus on the 3 continents with investment managers. And as the foundation is impact first, the Rural Fund is capital preservation. So overall, over the years, it has to contain its capital in order to give a loan of about 50 million a year. The key thing that we did last year is that we went to the board of Rabo and showed them that with the then existing capital, which was about 20 million, we were not able to provide the role from the missing middle and to help cooperatives and SMEs to develop across the value chain either to other departments of Rabo or to the ecosystem that Rabo has, of course. So we had a long and quite intense process, but last year we were able to double our capital. We got 20 million additional capital from the leadership of the bank. We doubled the size, and hence we're now able to take up that additional role, and hence we can do the scalable setting, and we're in the scale model, as we can guide a lot of the cooperatives now to the next phase, or connect them with other banks or with trade and commodity finance. And I'll give you an example in a minute about working via the steps of the business cycle. What is important is that, as I stated, that the loans of the foundation are about 250,000 euros and a maximum 1 million in extraordinary cases. For the Rural Fund, the 250 is the bottom, and the top loans are about 2 to 2.5 million. So you can clearly see that with that extension of the capital, doubling of the capital, we're now able to do bigger loans. And we had the investment committee, or as we call that, the impact committee, because we focus both with the foundation and with the Rural Fund on impact to the power of 3. So next to the economic side, which is very important, of course, for our target group, because of the $2 a day, we also focus on the social side and also on the ecological side. So with all our investments, we focus on whether impact first, whether we're able to reach impact in a self-reliant way, because the people have to take charge of that themselves, on the 3 axes of impact. That we're now able to do and to connect. And last week in the credit committee, we had an example of a loan to a cooperative in Nicaragua, Aldea Global. They're an MFI and a coffee producer, a coffee cooperative. The foundation gave a loan of 1.5 million for the MFI, and a Rural Fund gave a loan of 1.5 to the as a trade finance loan to the coffee side. The next step would be of this cooperative to go to trade and commodity finance, either in Rabo or of another bank, as they reach a different scale and hence have a better access to finance them. I have one example, I know, and for those of you who come from the Netherlands or in Belgium or in Sweden, I know, can you show the next slide of Tony Chocolonely, please? Some of you, it is nearly Christmas time in the Netherlands, we have Sinterklaas, so we eat a lot of chocolate. We have to watch the price though, because not all farmers are paid a fair price, and not all chocolate is made slave-free. Tony Chocolonely was, about 10 years ago, was one of the smallest brands in the Netherlands for chocolate. And for the last 3 years, they're the #1 brand, volume-wise, publicity-wise, and in all respects for chocolate. And that's mainly because of their claim to have slave-free chocolate, as a lot of child labor is used in producing cocoa. It's an example of scalable and working via the business cycle, because you see at the bottom, where you see the tractor, we as Rabo Foundation finance some cooperatives where they grow the cocoa in Ivory Coast and especially. So there we finance the cooperatives. The next step is, of course, a trader to gather the cocoa and to bring it to the factories. That's Cocoa Source. That is financed by our Rural Fund in the chain. So the next step. Then you see the factory, and that's Barry Callebaut in Belgium, who makes the chocolate, and that is financed both by trade and commodity finance, of course, of Rabo, and Rabo Antwerp for the factory. And it then goes to the supermarkets or the distribution points, and Tony Chocolonely itself is a client of a local bank of Rabo. And hence you see that, in fact, in this case, and it's an exemplary case, and unfortunately still an exception to the rule, we are able to make the scale visible via the various steps from the smaller farmers until, in fact, the end client. This is a key example. We're now working Aldea Global in Nicaragua is another example, where we take the next steps, and Caravella, which is a coffee producer, especially in Latin America. We're also taking the next step now to trade and commodity finance. With Rabo Partnerships, which is finance first and with impact, we're working a lot together in banks, in especially Africa, to have training centers for the farmers that we finance in order to bring them to the next step and bring them into the financial system with one of the partner banks. Well, Stephen, this was one of my examples. I don't know whether there are any questions considering what I've just explained.
Yeah, so people can post questions. I have one question for you, but then I'll immediately go to the questions in the chat box. Pim, first of all, it was apparently a very conscious decision of yourself and the whole Rabo family to build this continuous chain of different vehicles to link them to each other. One question I have, and which in fact relates very well to the question which is posted in the chat box already. How do you integrate this different structures? So you have the Rabo Foundation, you have the Rural Fund, you have those partnerships, you have then the bank itself. Is that in conception, it was very, let's say, explicit, but in reality, in the due deal, do you look into each other? Do you kind of share deals, or do you exit into the next level? So how much are you operating within your own pipeline, or how much do you kind of get deals from outside your pipeline and allow for collaboration with others?
Thank you, Steve. Very, very good question. And I'm afraid that at the inception of when we started, things were not that clear, because within Rabo, a lot of things developed. So we had a lot of dots alongside the value chain, you could say, and they were often not connected. So one of the key things that we started to work on 3 years ago was how can we connect the dots and make it add up and hence have an integrated following and work together, but then also use the ecosystem of the banks much more effectively, use the knowledge that is available in the bank via research or via the network, and also use the innovation part of the bank, like for instance, Aldea Global, where we send people from the data transformation office in order to help them work on the systems and work with data. So only until recently we were able to align, and especially with the 20 million additional capital, to work together on the value chain. It has been the case that since the inception of the Rural Fund, it has been part of the foundation. So we manage the foundation and the Rural Fund as one entity, although there are two legal entities, because with the foundation we have the AMBI setting, so that's because of fiscal reasons, and the Rural Fund is a fund. But we now have, and we did it only last month, we have one supervisory board now, and not two, but one, in order to make it more complementary to each other, and also to be better able to use the different instruments more in a value-added way so that they can add up. So if, in the example that I gave, we give a working capital loan to a cooperative, then we can do a trade finance loan with the Rural Fund and make it add up, and then connect it to partnerships and one of the local banks as well in Africa or in Asia or in Latin America.
Yeah, thank you, Pim. Another question popping up in the chat is, so you have different legal structures. Foundation is a different legal structure for, as you say, the tax reasons and so on and so forth. The fund is a separate legal structure. Of course, the bank is a separate legal structure. But managerial wise, you seem to get a more holistic approach. Yeah. So from the growth of the initial stage at the foundation up to the bank, are there metrics to follow through how much flow there is through this pipeline? And from a risk management perspective, do you take also that more holistic point of view, or is it still siloed and individual?
Within well, in fact, with the whole first part, it's more aligned now with both the foundation, the Rural Fund, but as we're sitting, well, not in a physical way, but normally speaking, we're sitting at the office next to partnerships. So there's a lot of interaction with partnerships as well. And in the board, the supervisory board, we have the head of partnerships as one of the members, but also the head of trade and commodity finance as one of the members. So you see that over the last 3 years, we've been able to make a lot of links with the adjoining departments in order to make the deal flow the knowledge flow, the network flow, the ecosystem flow makes much more coherent in order to work together. And that culminates probably next week as a proposal will be made to the management board of Rabo on a separate proposition of Rabo on smaller farmers. As you're doing a lot of it innovation, we're now looking as a bank to platforms that are able to provide financing, but also combine, for instance, with the data, but also combine the seeds providing for farmers. That can be done with platforms. So we now have a proposal within the board to align the various departments that are working on smaller farmers with a central coordination, and where we are the center of excellence for smaller farmers in the whole of the bank.
Yeah, wow, that's fast moving forward. Great.
Yeah.
Last question before we go into breakout rooms. That's from an internal perspective, Pim, and you can manage with your colleagues from the bank and from the impact fund, of course, a long way. But how do the tax authorities look upon this? Because for sure, in Holland as well, you have the ANBI status for the foundation, and you have very, very strict rules. So how do they see this collaboration?
We've discussed this extensively with them, and the key thing is that we need separate accounts, both for what we do with the Rural Fund and what we do with the foundation, as it has an MP status. As long as we do that, and that we also charge the Rural Fund for the costs of the foundation that are made on behalf of the Rural Fund, for instance, my cost or system cost of other costs as well. But as long as we have that clear and separated, then it's no problem for the tax authorities. Okay. And the legal structure is, of course, completely separate of the funds versus the foundation.
So you need very strict governance rules and transparency.
But you can manage it as one entity, and that's also clear. And that we've also discussed with the tax authorities.
Oh. A lot of learnings. Thanks, Pim. You'll come back later on when we close the session, but thanks for now. For the audience, what I would like to invite you now is to break out in 4 sessions, and there are 2 questions. So for each question, there will be 2 sessions. And the first question is, you've heard the talk of Pim, you've seen as well how Antonio and Repsol is also incubating different vehicles. From your own point of view, or just from a generic point of view, dealing with this topic, what are the potential obstacles when you pursue this collective impact strategy in a scale perspective, as Pim was explaining? What are the different potential obstacles that you can envisage? That's the first question for 2 groups. And then there is another question for the other 2 groups. What impact benefits do you see? Impact benefits, because I think it was clear also from Antonio's and from Pim's talk, it's about scaling impact. We don't do this just to feed the big machine, the corporation. We do it to scale impact. Of course, next to scaling impact, it might be a pipeline for certain innovations that are taken forward by the big company and where both the profit is generated, but also the impact is scaled. So the second topic is much more, how can we scale impact, and what are the reflections about the potential pipeline scaling that you could see. The way we're going to do this, I think you're going to just randomize the people into those 2 groups. I will invite you, because nowadays, after 1 year of lockdown, most of you are quite acquainted with this. So you're going to put into breakout rooms, and Arno will tell you when to come back. You just have to click. For those who want, you can use the mural, which is in fact just a digital post-it to write your conclusions. Because for each group, the first thing you have to do is to assign 1 person that takes notes, and come back 15 or 10 to 11 with the 3, 4, 5 max main insights. If you don't feel comfortable in using mural, that's fine. Just note down your 3, 4, 5 insights, which you then can share with the whole group. But so you go into breakout rooms, you appoint 1 person that takes notes, or mural, or just traditionally, and Pim and myself will navigate through the different breakout rooms. if there are additional questions, and we will reconvene then, let's say somewhere between 10 to 15 before 11, but Arno will say. So good luck with the discussions, and don't forget to appoint one spokesperson. They're coming back. No. Okay, because we have another 10 minutes left. The purpose was just to initiate a discussion, and this new research, of course, is the beginning of much more, and much more activities will follow. It would be good as a first idea, as a first kind of capture, to hear back from the different breakout rooms. So on question 1, what are the potential obstacles? We merged the 2 groups, and maybe Beate, you can quickly share the 3-4 elements that were mentioned as potential obstacles.
Yeah, it's my pleasure. It was a lively discussion we had. One element was about when you have a collective kind of strategy, it's absolutely essential that you have a mental setting and the mindset of all different employees of the foundation as well as of business. And it has to be, the walk the talk has to come from the top. So if you want to really make the storyline that there is a collective impact strategy throughout, from corporate foundation to the corporate people, then you really have to educate them, to sell the story to brands, to market, and to do a really good storytelling. That was one thing. And then there was a very critical aspect coming from Vincent Faber, who said there is a lot of wishful thinking from the corporate foundation people looking at what a company really can do. So corporate won't change the world was the aspect. So that's for sure something critical we can discuss. Included to that is also the danger of kind of whitewashing, that the corporates are using the corporate foundations to whitewash and to sell and market themselves as the good guys instead of really being after the story. And a third last point was about the reputational challenges when you have a collective impact strategy, that authorities but also the public can see you primarily as a smart investor than really somebody who is trustful going after impact. So these are maybe the 3 points we discussed. There was not a lot of time, but it was very interesting to see the different aspects and perspectives. Thank you
So much, Beate. Pim, I'm going to ask you at the end just to comment 1 minute, but so you can prepare how Rabo is dealing with those 2-3 challenges just in 1 minute. But before you go there, the other 2 groups dealing with the question on the impact benefits and the potential business relevance of this scaling strategy. Could we have one person from group 2?
Yeah, hi, I'm Francesca.
Hi,
so I'm reporting for group 2. So first, I want to apologize because even though I'm younger, I couldn't access Mural and work it out. I'm sorry, and I couldn't see anything. So I just put some notes in my Word sheet. And we talked actually about the obstacle. We focus more on the obstacle actually that could be encountered. And one end, for sure, there is the compliance challenge. So let's say NGO, when you are an NGO, there is a broader reach that you can achieve, and the company can for sure accelerate the impact at the later stage. But there is also the aspect of not falling in the trap or in the market trap, let's say. And Rabo Foundation shared with us its interesting path. So it took them 1 year to let's say to agree on the capital increase, but also another year to make understand to the company that the foundation was driving the fund, so that they were leading in charge with a specific mission and a specific objectives for sure. Then another obstacle is also the mindset and the capabilities of people inside the companies and how to dialogue with them. So find a way to dialogue and find a common shared language. And another obstacle that actually turned into an opportunity we see on one end. So it's most likely and it's probable that this COVID-19 crisis will shrink the resource available for companies to put into the foundation. But on the other end, government funds and people generosity. So COVID-19 really, let's say, make rise people generosity. For instance, many examples were made, like employees reducing their salaries to give to the community. So these kind of funds can be untapped, and and the corporate foundation can, let's say, engineer a new kind of relationship and access these funds for social innovation. I don't know if anyone of the group wants to add, integrate.
Doesn't matter, Francesca. Thank you.
Oh, well done.
Yeah, very good. Excellent. Last group, a 2-minute debrief from the last group. Is there a spokesperson from the last group who want to share insights?
Yes, I think that's us. Group 4.
Oliver.
Yes, we talked about the benefits and the business relevance of such strategies. And we had a very good discussion, I think, and we have quite a lot of points and benefits that could come out of such strategies. So as we can see with the example of Rabo, is they're really building a pre-commercial market. The foundation work with the bottom of the pyramid, which are potential customers in the long term. If they already start engaging with them, that ultimately builds a pre-commercial market and helps the core business to later get access to them. Turning this argument a little bit around, this provides Rabo with insights about how they can scale their core business, how they can scale it to become more future fit and to access customer segments which are under represented and not served to at the moment. They get a lot of insights about these customer groups, people at the bottom of the pyramid. They get insights about what they need and how they need to change their offerings and adapt it. What we also see is that what we also discussed is when Rabo kind of has touch points with these people from the very beginning. So from the bottom of the pyramid up until when they enter the core business of the bank, they kind of have an increased transparency and control over their entire value and supply chain. So starting to engage with potential customers very early on and being with them throughout the entire value chain to up to the core business increases transparency and helps them to control their supply and value chain. Also, we discussed that such strategies help to build and maintain the social license to operate, which any kind of corporation requires, which is a mix of the brand awareness, of the reputation of the brand, and such activities help to increase and maintain this license, the acceptance of the customers to engage with the brand.
Thanks very much. You mentioned a couple of very interesting things: pipeline, insights, future fit, extended value chain, license to operate. Great. Tim, I'd like to give you the very final word. And of course, not to go on all those topics, we don't have the time, but how do you manage the mental set from people that are impact focused on the one hand and people that are commercially focused on the other hand? How do you kind of manage to blend that, and how did you overcome that, or is this still a struggle?
I think, and rightfully so that you mentioned it, the conflict of interest is one of the key elements that could hamper this whole development. In my previous job, because the reputation aspect also came up, in my previous job, I've been responsible for the reputation and communication of Rabo. So, and that happened after a major incident of Rabo, and I've seen the very dark side of banks and what bankers can do and how they add to the problem of society. The new CEO of Rabo that came in made it his objective to make the bank purpose-led, so social license to operate, as was stated, to make the bank not part of the problem, but part of the solution by focusing on the major transitions that we have had of us. So he's focusing on a different culture within the bank. That's one side. So the environment where the corporate foundation is working in is changing completely. That's one. And I see it from my perspective, I see the corporate foundation as a kind of Trojan horse in order to speed up that process, as a front runner, as an inspirator, as a showcase, as whatever, in order to make this visible. One of the key things that we did in that process, we were kind of NGO, and when it came on board, we were mistreated or misused in a lot of ways, because the bank is getting a lot of questions for donations or what otherwise by the board members, and they use the foundation for that. I've stopped that radically in order to professionalize the corporate foundation and make it more, a little bit similar like the language in the bank, so that you can adhere to the language in the bank, but keep it from your perspective. So use the structure, use the fiscal reasons in order to make pretty clear what is the reason to operate within the foundation. And that's a different one. It's impact first, and it's different from business first. If you professionalize and you keep that setting and you stop all the fuzziness with the philanthropic side, you're able to connect with the business people and make them clear what is possible and what is not possible.
Thanks so much, Pim.
Yeah.
It's not only a great example, and congrats with what you achieved in over 3 years, but also very inspiring. I remember from your answer two things. To a certain extent, apparently you need a favorable business context. The business should redefine its purpose and its context. And I also very much like the second thing you say, the Trojan horse. Stick to your purpose, but feel how you can move from within. That is also a super great element. To all the participants, thanks for joining. And of course, this afternoon we will continue, and tomorrow we'll have another couple of keynotes. So please keep following the different discussions. For now, I would say, as EVPA and Daphne, we see this as the start of a discussion, linking you to continue everything we do, but also we'll publish some of the research. So if you feel a bit unsatisfied about where we get in an hour, there is a year to come where we're going to have plenty of time, hopefully physically, also to rejoin and discuss. Thanks so much. See you this afternoon.